first idea is that big medical equipment company, Medtronic. Why do you like these guys?
I think it's a turnaround story. I think they'll be able to beat and raise, and those are the type of stocks we like, that come out with earnings, guide higher. Usually the stock trends higher, and it's gone through a real rough 18 months here. It's a global medical device company. They're involved in some pretty like the growth areas you want to be in: cardiovascular, diabetes, neuroscience. But because of COVID, because of inflation, because of supply chains, those were three headwinds for them to try to manage their global business. And they missed their earnings last year, every single quarter. Their last quarter they came out with at the end of last year, finally was an inflection point, we thought, and that's why I'm prepared to come up here and say last year's dog, give it 18 months, but I think it's very similar to Boston Scientific. It just trades 2 multiple points cheaper. It's got a growing dividend, 3.5%, things that we like. And as you can see, 16 holds on the street, so not everyone's on the story yet. So we like it, and it's a good alternative for someone looking for healthcare in their portfolio.
Let's check out your next idea. It's the nat gas giant, Tourmaline.
Yeah, so we met with them last week in Toronto. They were here for an investor update, and I came away, more convinced than ever of their story. Their 75 years of inventory. It's not all booked right now, but they've just got a massive amount of inventory. And when you heard ExxonMobil, the rumor this morning to buy Pioneer, that's what they're after. Inventory. And look at that stock price. Here's Canadian's largest natural gas producer in Canada, fourth largest conventional liquid producer in Canada, owns most of its infrastructure, and the stock's down $25 this year. So it's on sale. We think they'll give you a total dividend. They pay out specials of approximately $5 this year. So you're almost getting a 9% yield on a stock that I think is too cheap by $20.
Counting this special dividends or buybacks? Sorry.
The special dividend's about 2%.
Oh, yeah.
And we think they'll give you about 7%, so 9% in total of income back to you,
including
in dividends. They don't do many buybacks.
Oh, I'm sorry.
They might do some if their stock got really. It's mostly dividends.
Okay.
And but I think the stock's $20 too cheap here. It was $55 all last week, so I think it should be in the $75 range. And I think nat gas, this will have a better outlook, especially in 2025, because that's when LNG Canada comes on, which will be bringing 10% of our gas overseas. So the story looks really good here, a really attractive entry point for viewers.
And presumably, Tourmaline is popular with investors over the long term. If gas does move up, it'll be a first port of call for a lot of people. Yeah,
it's 20 billion market cap, so it's very liquid. People go to it, and people have just exited the gas trade. Everyone's on oil, so it's been put aside. Look at the chart; it'll be back. Just give it time, be patient with it, but you'll make money on it if you buy it here.
And then finally, Granite REIT. They're big in those warehouses, logistics, industrial properties.
Yeah, so we talked about Cargojet and Amazon earlier. This is really the building that they, would think of the buildings when you go to the airport all around there. And, net asset value on Granite's close to $100. So it's trading at about a 15% discount to NAV. That's always a good entry point on REITs. What I like about it, it's 99% occupied. And 80% of their leases in 2023, they just renewed at a 20% lift in rent. So earnings should go up 7% this year. It's been taken out with all REITs, and we think it's a good entry point of a real high quality REIT here in Canada. And it's a way to get global exposure. They've got buildings and e-commerce and distribution centers in the States, Europe, and Canada. So it's a way to get global real estate exposure by buying something on the Toronto Stock Exchange.
I'm not sure if we could put up a one-year chart for Prologis. I mean, they're the giant one in the States,
right.
PLD in New York. Is there a fear, though, people will decide, well, the momentum's gone out of that whole e-commerce infrastructure?
It's coming back because we've got onshoring. We got to store stuff. So you want to build chip plants, you want to build EV and battery plants, and they're building a big one in Windsor, Ontario. Well, you just can't, LG and Stellantis just can't put up an electric battery plant without then saying, well, we need land and we need places to store everything. And usually with that comes with jobs, which it's just an economic boom. So that's the new trend for these industrial stocks, is the onshoring that's going to happen here in North America for the next 5 to 10 years. So the trend's still there, and we do like the industrial REITs and Granite in particular.
Are you picking at any of the office REITs right now, or do you think it's too uncertain?
I think we have about 1% in our REIT fund. 1% of the 100% is office. It's probably Allied Properties. So it's just something we're waiting and seeing. There's no tailwinds on it right now. So there's no need to be a hero in office when you've got apartments and industrial REITs doing the heavy lifting and working for you. So
I wonder what will happen, because from what I've seen, older buildings may be in trouble, the older office buildings.
If you have, we're moving to the Well, a new building in Toronto, a new office building.
Where the Globe used to be.
And that'll be the premier office building in Toronto. And there's where CIBC is moving there. But it's the B ones that the B quality are going to be totally empty, and everyone's going to want to be in the A buildings. So it's all about the postage stamp. It's the best building will be full and will attract people, especially the developments that have residential attached to office. Because you've got 100,000 people living in condos next to the office, it's going to be busy. So you have retail. So that idea works. If it's just standalone office, off the 401, getting off on here, Ontario, if Pfizer decides to move out, who needs that spot? That's the risk in office. And luckily for Canadian REITs, there's not a lot of exposure to that type of office. So
that's interesting. Yeah, an office block just standing in the middle of nowhere kind of thing. Yeah, Rob, great stuff. Thanks very much. Rob Lauzon.